Okay, it's Monday, January 30th, just following up once again on T-Mobile. And I'm kind of make this into like a break-even tutorial kind of set of videos here where I bought the stock here at the blue line. I was trying to scale out to set up a no-risk trade. I broke even, and now you can see it's moved way below my entry point. So in this case, a good thing to break even. You know, when I did bought it here at the blue line, try to scale out here, missed it. When it came down, I was giving it one more shot to pop up. But I decided to I actually took a very small gain, but let's call it break even. And then you can see it goes way below the blue line heading lower. And the key thing here, again, is always the context of the particular trade. If I'm buying here early in the morning for the first directional move of the day, a lot of times I'll set my stop here at the midway point of the first bar near the open, you know, because I know that I can give it a little room for that first move of the day. When I'm doing a secondary trade like this, I kind of know the context, and I want to see that 15-minute chart after this pause. That's where I bought it. It went up, and then I bought it on this pause. They should have paused here and started higher towards those highs. I mean, that's really all that I was looking, you know, for habit. Sometimes you get, you know, these kind of moves where you move up, comes to the halfway point, and then you get a secondary move up towards those highs of the day. In this case, the 15-minute chart, as I kind of described in the previous videos, just kind of gave me an inside bar and then a failure bar on bar. You know, this took to continue higher, and then I broke even. So you can use the 15-minute chart in this case very tightly to manage a trade like this, where in this case, I'm a little bit more, I relax it a little bit more because I know I can get a little choppiness on the first move of the day as it heads higher, but the real stop's more down here. So anyway, just thought I'd point that out. Now it's heading lower. I guess I could see it targeting this stop right here. Anyone who bought down here and was trying to hold on is going to get stopped out, and then maybe by then it kind of comes back up. But time's running out in the day for any kind of, it's been an hour to go in trading, so I'm just going to watch it. Again, I like this one for the future in terms of, well, earnings are coming out. That's the only tricky part about this, but I really like the fact that if we can get a two-up kind of move here on this stock, it should hit that target, which then triggers the weekly chart. Well, I can't, let me get it right here. The weekly chart would have an inside bar here, that like a double inside bar. Here's the inside bar from last week that can move up and then start heading to those monthly highs. So I like T-Mobile in general. So I just thought I'd kind of take it, you know, try this trade a couple of times today. Made a little bit on the first one here when I bought it early in the session. Tried a secondary trade here, hoping for a little scalp trade. And I'll be watching it in the days ahead for moves above, you know, today's high to continue to buy this. But if it you know, if it makes new lows, if I go back to the daily chart here, and we continue to come down, I'm not going to, you know, buy it. But now I'm kind of looking, it starts the week on a little bit of a shooter bar maybe here, but then if it can hold here and get through the open of today and get a two-up bar, or I can get intraday price action that anticipates the two-up, I'm going to continue to look to buy T-Mobile going forward. So anyway, that's it. Break-even trade, and just thought I'd point out the logic of it and why in many cases, you know, this might go much lower, so that's why you want to cut risk as your primary objective with any trade.